Salman, great to have you with us on what's turned into a pretty big morning in terms of inflation data. The German PPI coming in much higher than expected in terms of the change versus last year and the change month on month in July. Why are we seeing the euro trade lower this morning if we're looking at higher than expected inflation and potentially higher than expected or more aggressive rate hikes from the ECB?
Sure. Good morning. I think behind all this is the ongoing energy crunch, which is happening in Europe. Obviously, Germany is the most exposed there because of its dependence on gas supplies. That kind of shock is a very tricky shock to assess from an FX perspective, because ultimately, if gas supplies from Russia go down to zero, you're looking at a severe growth shock as well, about potentially 20% shortage in gas. So that is the problem, whereby how do you assess that shock, which is obviously very inflationary because prices of key commodities, especially energy commodities, have to go up, but there's going to be a lot of demand destruction as well, with a very strong risk of a recession. And that's where I think the two forces are in place right now. And the clearest signal is that obviously inflation is hot, and that could potentially turn into a growth shock.
We're seeing a huge amount of price action this morning all along the German yield curve, but in particular at the short end of the curve, we're seeing a huge amount of movement higher there. Do you think that the market is appropriately pricing the risk of a recession, given how difficult the energy picture is, as you just outlined?
So we are of the view that the ECB will not be able to hike much after September, as this crunch will have hard data implications. So right now, we're seeing a lot in prices, but the energy rationing will start to hit hard economic data. We've also seen soft data soften and significantly deteriorate into recessionary territories, but hard data is still holding up. And that's where we think that the ECB will have to pull back and see this as a growth shock, because if there is no gas, there is no gas. There's not much they can do by hiking rates into a potentially severe recession.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.